Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Tuesday morning. What a difference a couple of days can make. I don't want to make too much of the current bounce. We're still very much in a downtrend. We're still very much in some uncertainty, but it doesn't mean there may not be some opportunity that is forming. If you've been catching any of the content that we've been doing here at the Sector Secrets Mastery, Charts and Coffee, the Sunday show, or the free videos in the Simpler Trading YouTube channel, you know that a lot of the current, as of the last 4 to 6 weeks, a lot of the current focus for me personally is longer term, this 12 to 18 month perspective. In fact, that's what I dedicated this week's weekly watch list at Simpler Trading, as well as the current top tier Outlook newsletter too. So let me give you all a little bit more insight into what I'm talking about, and maybe a process, a repeating process that you can look at. Because, gang, the idea of, let's not call them crashes, right? There's just so much emotion tied to a word like crash, right? Unlike the word correction. And these are all just corrections. If you want to think of it, a correction of what, Rag? Just a correction, a mathematical move lower from a high. It could be an all-time high. It could be the last high of the 12 months, whatever it is. From that high, from that peak, you know, at this point, we know it's an inflection point. We don't know at the time. I mean, how many all-time highs have we had? And we just kept moving higher, right? So when we take a look at where we are right now, it's a correction, 10%, 20%. Yes, financial media is going to give it all sorts of names. We're in a bear market now, whatever, right? Please remember that when we're in a bullish market, you know, words like manipulation and monetary policy, they're not questioned as much because we all like uptrending markets, myself included. But let's keep that same even keel when we're going into weakness, a correction. It's hard to call anything that overall stocks do a bear market. And if we do want to call it that, for whatever reason, let's just call them uptrends and downtrends. And we're going to have uptrends and downtrends throughout our career. Some of them are going to be a little bit more severe. So when using this 12 to 18 month perspective, once we have a good mindset around what that is, one, I remember that in modern markets, and for me, modern markets really are 2008 forward. There was a market change in the way central banks behave globally at that point, and that's pretty much been the tact ever since. Very accommodative, very quick to respond to equities weakness. And if with a 12 to 18 month perspective, the bottom line is this: in a year to a year and a half from now, am I going to regret not at least putting a shopping list, a wish list together and buying stocks a longer time horizon, hence the 12 to 18 months? So my answer is always a resounding yes. It doesn't matter if it was 2001, 2008, 2019, 2020. And we had a pretty good pullback in 22. We had a pretty good pullback in April of 2024. So these things are going to happen. If I take a look at what's happening, first step is, and if you want to jot this down and see where it's of interest to you, first step is a 10% pullback, retracement from the all-time high gets my attention. 20% is akin to ringing the dinner bell, right? And then I start to build a list of names that could have, bear with me here. I think I lost the essentials room for whatever reason. It booted me out. I don't know why. Okay, anyway, back to what I was talking about before. When we have an overall move to the downside of 20%, at that point, start looking at a weekly time frame, and you want to make sure that weekly time frame is now not in a downtrend. I don't know what tools you might be using. Maybe you're using the ones that I use. So that first step is make sure that that weekly time frame is not in a downtrend. Okay, the second thing is making sure it's above key levels. And that for me might be a 200 weekly. That's a great place to start. if you want to start to get a little bit of a, you're not right. Okay, I've got this under control. I've got the beginning of a plan. Let that plan start with even just a basic watch list like that. All right. So then moving on to, what about now? Well, when I'm day trading, there's a pretty good chance that I'm going to be looking to the long side today. Yesterday might have been the short side. Today might be the long side. The first thing I'm going to do is take a look. And right now, you can see where the red and the green are in terms of movement. And by the way, I have been from time to time keeping an eye on where the daily price movement range is. And I'll even put that sometimes on a 5-minute chart lately, because when I was traveling, I was out of the office a couple weeks ago. It's nice to be able to pull up one chart and have all my volatility zones on it. On a 5-minute chart, I really only need the hourly price movement range. You'll find, though, in extreme volatility, even the daily price movement range on an intraday time frame might be in play because of the wild swings. So if we're consistently breaking the hourly price movement range, not because the HPMR is broken, but because we're moving outside the 68% probability. If you just want to use as a generalization, go take a look at what that larger volatility zone might be doing. Right now, things are pretty normal. Normal meaning the resistance zone of red is above the green. Believe it or not, that wasn't the case, I believe, at all yesterday. And we're getting some good separation between the two. This is looking a little bit normal. So if I ask myself, is it safe to go in the water more so than yesterday? Yes, things are a little bit more normal. Why the obsession with normal? Because normal action means we can place stop losses based on normal volatility expectations. There's a more realistic risk control, right? Remember, our job is risk management, right? So there's a much more realistic risk management that's going to be associated with any of my day trades. Okay. I don't want to say we're out of the woods yet, but clearly, if you've been listening here, we know that exaggerated moves in panic can make a 10 and 20% pullback. At that 20%, you want to start paying attention, because someone out there, sadly, I saw a lot of tweets going through on Twitter that we're talking about, my dad, these different traders, and my dad's going to liquidate his portfolios holdings. I'm thinking, oh my gosh, what is going on? Is there no guidance out there to let people know it's not a loss, it's not a realized loss until you sell, right? And that's one of those things that kills me, because typically retail traders will be happy to buy at all-time highs like they were throughout Q4 of last year, and then they sell at the lows, and then they wonder why that type of micromanaging isn't serving them. It isn't serving them. Anyone who's called me, and I'm sure all of you have gotten phone calls from family and friends that know you're a trader, an active trader, and all of them say, what do we do now? I said, well, when do you need to touch the money? Well, not for any time soon. Okay, well then don't worry about it. Turn the TV off. Don't look at your statements for maybe 3 months. Leave it alone. Because if your time horizon is nowhere near having to touch the money, I know this doesn't apply to everybody, but if your retirement or your touch the money date was 2025, mid 2023 is when adjustments are typically at least need to be made. A plan for trailing stops and targets and more of a defensive posture, more of a bond oriented approach, right? That's then, not now in the panic. And, I don't know why this isn't basic human knowledge, right? We all, at some point, whether it's 401ks or whatever, IRAs, we're all going to be in the market in some way. So, kudos for those of you here in the room thinking, hey, I'm going to learn how to do this because A, nobody cares more about my money than I do. And B, I need to understand the plan. I don't want to just give that understanding and power away to somebody else. Sure, I can have a partner in this, right? I can have someone who's going to watch it more closely than I'm willing to, but I need to at least understand the plan. Hence, my job is, hey, this is my plan. This is what's worked for me for decades. It doesn't matter if this was 97, Asian contagion, ruble crisis. It doesn't matter if it was '01, tech bubble, '08, etc. This has been the same plan for me for many, many decades. All right, so questions coming in. If you have any, let me know what is on your mind and what symbols you want to take a look at. And the first up is, let's see, what are my thoughts on PLTR and NVIDIA for shares 3 to 6 months out. So I won't typically buy shares, Joanne, with an outlook of 3 months. But, just to give you an idea, if my outlook is 3 months, that's probably borderline going to be a daily time frame setup. But if it's 6 months and beyond, and you could probably use my weekly chart setup for your time horizon. So PLTR, yeah, I had a couple members of the mastery asked me yesterday, Rog, is PLTR a mean reversion? Is this a pullback in the zone? And I think it was in the mastery. I gave everyone the levels of 64.35 to 76.35. That whole range. And if you want to use a Darvis level, that's at about 75. That is a mean reversion on the weekly time frame. Yeah, absolutely. It's still in an uptrend. And we actually, now I remember what we were talking about. We started talking about the different layers of AI and what layer PLTR would be in terms of infrastructure versus coding versus, whatever it may be. And yes, this was yesterday, or I should say, as we were in that range, whether that be on the week of the 31st, or if you're talking about the action from the 4th, yes, in that zone, it is a weekly time frame mean reversion. Are we below $100, 20%? Absolutely. The dinner bell rang long ago, right? So the attention at about $100 was pretty extreme. And then I'll start looking at levels like 74. You can see there 65 down to 64, and change. That's the zone where if I'm going to build a long position with that longer term expectation, Joanne, that's how I would do it. Now, it's not always going to be the same setup. I'm not going to always have a valid mean reversion setup on a weekly. That's reserved for trending weekly timeframes only. So let's say someone asked the same question about, for example, NVIDIA. That was your other question there, Joanne? Okay. So NVIDIA is not a trend, right? You can see that. NVIDIA is not a trend. And if I'm looking for that 3 to 6 month answer on NVIDIA, the soonest that I would even think about it would, wait for that 20%. We've already crossed that barrier. Okay. Then that gets my attention. Then I'm going to look at my charts and say, how often have we visited the first standard deviation of the volume weighted average price? I'm going to ask myself questions like, where was previous support, whether that be aggressively up at about 97.5 or a little bit more conservatively at 85, or maybe even more so conservatively at 76. Notice that all these lines, in case you didn't know out there, all those kind of magenta, I guess, purpley lines and the yellow lines, those are all automatically drawn. So I'm not looking for something that fits my narrative. I'm looking for something that fits the narrative of price. So notice here, it's not a mean reversion conversation. Now, by the way, back in August of last year, if you were looking at NVIDIA, that pullback down to about 92 was a mean reversion. And you can see what it did in the wake of that, went all the way up to 152 and change. So once we have a move like this, it's no longer mean reversion. I'll look back to prior support. I'll start that hunt, if you will, at 20% pullback. 10% gets my attention. And then that's the zone. That's probably a pretty good zone to keep an eye on as well, defined by those previous support and resistance levels. You can always have a plan. And if that plan is, let's say like it was in Q4 of last year, there wasn't a whole heck of a lot to do with all-time highs in a longer term portfolio. And again, I don't think we're out of the woods. We'll probably see all sorts of volatility. And if this is your first quote unquote crash, if this is your first 20% pullback and you survived it, congratulations. Most people do a lot of stupid things in times like this. If you were able to keep from scratching the itch of let's buy an all-time high, again, congratulations. Because the folks who are suffering the most, unfortunately, are the folks who chase things at all-time highs and then sell them after a 10 or 20% pullback. I'm not a math major, right? I can't do calculus, but I'm pretty sure that is not the arithmetic of account growth. Account growth needs a lot of patience. And this is where all of us should channel sort of our inner Grandpa Buffett. Because Grandpa Buffett, there was so much made of why Buffett had so much cash. Why does anyone here think Buffett was sitting on so much cash? If we're talking a little bit longer term, I don't subscribe to everything. Nobody has the same goal and objective. He's managing the business of Berkshire Hathaway. His exit plan really doesn't exist because he's hoping to keep growing this forever and ever, long past, when he's around managing it, right? So that doesn't apply to you and me. We need a when do we touch the money date, right? But Grandpa Buffett teaches us something, and I say that endearingly. Grandpa Buffett teaches us something important about the reality of trading. And I was watching some really good interviews. There's a channel. I just am familiar with the fellow from Twitter, but there's a guy named Riz, Words of Wisdom, really cool podcast, and he gets some great traders. He got Peter Brandt, who I've known since my StockTwits days, and he had a great interview. Anytime you have a chance to listen to Peter, he's been trading commodities on a longer term time horizon for 50 years. I thought my 30 plus was a lot. Peter's been at it for 50 years. And he had some really good, interesting, again, his perspective, comments on things like day trading and prop firms and things like that. Very, very experienced guy sharing his experience. And one of the things that he discussed, and I find myself doing more and more, is embracing that longer term. Then they also had an interview with very active day trader, Linda Raschke. And again, two really experienced, successful traders talking about a lot of mindset. It isn't about, well, what's the setting of their moving average? And that's not really what we're looking for. We're looking for, how do these people handle price action? How do these people look for setups, right? Not the minutia of the indicators and the holy grail. Neither one of them, delude themselves into thinking that, because they've been doing this a long time. So that's what I'm thinking. If you can focus on the right mindset for what we're dealing with right now, once we recover from this, and my gosh, gang, yes, there will be a recovery and the uptrends will resume. And, that's the nature of the market most of the time. I don't know where the notion that the market chops and trends 50-50 came from. It's really not true. If you want to look out on a logarithmic chart, the overall movement of the market is up, right? So while I may not want to be a swing trader bullish, and I'm not, I can be a day trader this morning and be bullish. And to Jawan's question, NVIDIA, I'm in the zone. Palantir, we're in the zone. And that's with that longer term perspective. So you don't have to pick a favorite symbol. You don't have to be Rog. I just trade the S&P. What a sad thing, right? To go to the playground that is trading and say, I'm just going to sit on the seesaw all day. How sad, because there's so many other things we can do. And I don't want to ever just say I just day trade, or I just swing trade, or I just position trade. If we can use the time we have available to us every day and say, hey, what fits my schedule? For some traders, day trading is unrealistic. They have jobs, they've got somewhere else to be, and a much more hyper-focused short-term time frame approach just isn't realistic. So it's not that they don't want to be day traders, it's just not feasible. All right, for others, and I think for a larger group, active swing trading is very doable. Usually on a daily time frame, time horizons are at least 2 to 10 days. It's a slower process because we're getting fewer candles, as opposed to, say, a 5-minute chart where we get 12 new candles every hour, right? We're getting roughly 20 candles every month when we look at it from a swing trading perspective and a daily chart. For those traders thinking, Rog, swing is cool, rather than going to day trading, what's the other thing I could look at? What would be swing trading and, right? For some people, it's swing trading and day trading. For others, it's swing trading and position trading. That would be another thing to consider. And that's where you look at the weekly time frame and a far longer time horizon. That's where you're building a portfolio with a touch the money date far, far off. For me, most of my portfolios usually have a minimum sort of maturing time of 7 years, right? Five is on the, have I ever had a 5-year one? 5 to 7 years. I'd say 7 is about as small as any of my time horizons are for my position trades. So if 5 to 7 years is my smallest, touch the money date, do I think a 20% pullback that's happened over the course of a few weeks, really frankly, a few days, is going to undo that? I think most of you know no. So I really want to make sure no one's making decisions they're going to regret right now, that in the 12 to 18 months, that's that 12 to 18 month perspective, you'll think, I coulda, shoulda, right? I don't want anyone in that coulda, shoulda. All right. That's the show. Thank you for the questions, as always. Thank you for, the best way to replace panic is with a plan. And, plan is really part of the education. So thanks for being a part of Charts and Coffee. I will see you tomorrow, same time, same station. All right, gang, be good to each other.